Dharmesh Mehta too joining in on the show right now, and we've got Sandip Sabharwal as well right here in the studios. Dharmesh, hi, afternoon, and we are just quite mesmerized by the kind of mature reaction by the markets. It's almost like the election day outcome, wherein you didn't like what was announced or what came by, but the market has just been so quick to lap up onto the dip.
Well, a taxation event will not change the look and feel of the market. People come here to make money. You've just taken some portion of that money back as a taxes. But as far as they believe that the markets are good and long term you can make decent returns, this 2.5% addition on the long term and 5% short term will not dent the market. It's definitely a negative, but it's not a negative to turn the market around.
Let's cut the two window. I'm with Dharmesh on the same frame. Look and feel तो change हो गया धर्मेश भाई.
Yeah, that was thanks to going to Tirupati and taking the blessings to ensure that we have a good market for the long term.
I should put a 10-year-old picture of Sandip Sabharwal also. Then I can say look and feel change हो गया, right Sandip? Look and
change
feel.
हो गया.
हाँ, but
Even you look the same.
no, sir. Trust me. We haven't met for a while.
I know.
Okay, my point is, if I would have made a scenario in the morning that a change in capital gain structure is coming, STT is going to go up, and the sheer definition of the holding period will go from 1 to 3. That's a big change, right? That changes the time horizon. Then predict the market level. Everyone would have said the markets would have gone down. But what do we have here? A market which had a knee-jerk reaction, and bravo to the bulls, it is trading in the green. Why is that, Dharmesh?
Well, you have 1,25,000 crores cash lying with mutual funds. So the amount of liquidity which is available today, yes, as I said, it's painful to see taxation go up. And, in lieu of long term, we had STT which had come in. So we have long term also gone up, but STT still remains, which actually should not be the case. But it is what it is. My fundamental story, long term story for India is still intact. So I'm not too bearish on the country just because this is one budget event. My profit has come down, to be honest. That's what has happened. But it's not something which will shake the market and then the confidence in the country. So the budget hasn't done anything fundamentally wrong to shake their confidence. And don't forget, we have another budget coming up in almost 7-8 months. So this is the year we had 3 budgets. So you don't expect anything big to happen in this budget, which is the case. Yes, long term should have been lesser. Short term would have gone up. I was okay, but it is what it is. I think the government thought enough money is made in the stock market. People will be happy to part with some part of it. So it's not a big negative.
Okay. Nilesh bhai, the India story is centered around SIPs, mutual funds. Like Dharmesh rightly said that there is cash, and if the India appeal is centered around SIPs and not tips, so one should not really worry about it and time to move on. So whatever changes have come on taxation, do you think should be ignored?
So Nikunj bhai, don't ignore it. You have to definitely take that into account. People who are trading in FNO now will have to bear higher cost, and hopefully they'll reduce their trading activity. But from an investor point of view, as Dharmesh bhai was mentioning, the fundamentals have actually improved with fiscal consolidation, with investment focus continuing, and hopefully with better employment generation, this growth is likely to sustain. So the valuation impact on the market will be far more from the budget than the diluting effect of increased taxation. So overall, India growth story continues, and tips की जगह पे सिप्स ही करिए.
Sandeep, hi, afternoon. How is it that you would assess the budget? I mean, the market has done what it's done and completely absorbed the knee-jerk reaction. But what do you have to say about the messaging for equity markets?
So I think the messaging from equity markets comes from two fronts. One, the economy. Second, what it does for the market. From the economy standpoint, it's fine. Fiscal deficit going down is always bullish for bonds and interest rates in the economy and general for long-term growth. So I think the most important thing is fiscal deficit. If it goes to 4.5% next year, then government will not borrow. Government might borrow less than what it's borrowing this year, and that is positive for economic growth. Capital investment cycle is strong. First 3-4 months went in elections, so that means government will be spending much more in the remaining part of the year. So it's good for the economy. From the standpoint of the consumer, they did really nothing. They reduced some taxes but took it away from capital gains tax. So net benefit, Finance Minister herself said, was zero. So that pushes back consumer revival further. So I think consumer demand revival gets pushed back further. There will be a natural revival after 2 years of subdued growth, but then overall revival gets pushed back. So I think, and this taxation changes in the guise of making it simpler, I think it's a significant increase in taxation. So when the markets are doing well, you say it's absorbed, but I think 15 going to 20 for short term, 10 going to 12 and a half for long term, it's a substantial increase if you look at it in terms of percentages. So it hasn't impacted the markets, but then it has an impact on the post-tax returns you make from equities. And I think some foreign investors might think otherwise, etc. Overall, I think neutral for the markets per se.
And dividend taxation has been left unchanged. So in some sense, a double taxation.
Yeah, but there was no expectation of that changing, so I don't know why people expect that. So I think one thing you realize from this government is they are not going to give you something extra. So as long as less is taken away, you should be happy.
Nilesh, I'd like to draw your attention to the fiscal deficit number. Today, we are feeling happy that it's coming down from 5.1 to 4.9. But could that come at the cost of perhaps a cut in lot of expenditure, lot of government-dominated schemes which have had a booster effect? Because now you know that where the peak is hitting in terms of public expenditure.
So, Nikunj bhai, my feeling is that revenues are underestimated in the budget. The first quarter advance tax collection is up about 25%. We are not factoring in that kind of corporate income tax appreciation. Second, there's very, very limited number provided for divestment. This market does provide for a better opportunity. Between tax buoyancy, higher dividend income from PSU companies, and potential divestment numbers, we are likely to have revenue surplus. So my feeling is that government has resources and they want to message to investors that India is firmly on the path of fiscal prudence. We will become probably primary surplus economy over next couple of years. Only one amongst the few in major economies worldwide. It could lead to India's credit rating upgrade. So overall, I don't think so. Government is controlling expenditure for the path of fiscal prudence. It's the availability of resources which is resulting into path of fiscal prudence.
Dharmesh, Vinny this side as well. I wanted to know also in terms of a couple of things, right? Angel tax that's coming off. So on that front, while also in terms of IPOs, what are you looking at it in terms from the budget point of view? What is your view now coming in for this side?
Well, as I read the changes as far as the unlisted stocks are concerned, they said the long-term capital gains now will be 12.5%. So this is actually great news for all the PE investors, because earlier they could only get the tax benefit if they were going to come through the IPO route, which is the DRHP route. But now if it even do a secondary sale before the IPO, they're going to be taxed only at 12.5%. If that is true, it's a big positive for PE money coming into the unlisted segment in a bigger way. Secondly, as far as IPO is concerned, the budget hasn't done anything for the current sentiment to change in either ways. So I would say the current bullish sentiment on IPO continues. As I said, if you're making money, you're happy to give more taxes. And so unless that confidence is shaken or the fundamental is shaken, I think the IPO market will continue the way it is. But don't underestimate, there is huge amount of supply coming to the market also. So that may dent the sentiment rather than the budget, what it is today. And also one more point on the buyback, which as I understand, they're talking about taxing the buyback now at dividend tax. But there's no clarity what happens if I sell those shares in the open market buyback. Because it's impossible to know what you sold is for buyback or for just normal market. If that's the case, the number of buybacks in the open market will increase big time. Because then I'm still going to be taxed at only by long-term capital gains or short-term, whichever is the condition when I'm selling my shares. So I won't be taxed at 40% dividend tax or 40% the buyback tax, which has now been introduced, which is in line with the dividend tax. So if the more buybacks happen, in fact, the stocks become more stable rather than worrying about the markets.
Property, right?
Right. Nilesh, what I also want to know is in terms of obviously couple of news flows that came in was in terms of overall when you see the Mudra loans, yes, that got enhanced. We're seeing credit guarantee schemes for MSMEs. Now that's going to be without collaterals. While yes, it is a positive in terms for a consumption side or consumer point of view, but for banks, so when you're looking at the banking side, we're seeing clear pressure coming in that side and a bit of a jitteriness that we're seeing over here. So is that something that one should be worried about from that point of view?
So essentially, if we look at microfinance institution, they do lend money without any collateral and sometimes on group guarantees or group commitments. By and large, at the bottom of pyramid, we have seen absence of Nirav Modi's and Vijay Mallya's and Mehul Choksi's of the world. So my feeling is that credit guarantee scheme introduced during COVID pressure has worked wonderfully well without providing any direct fiscal benefit. The MSME sector was supported and it helped them come out of downturn of COVID without much of a trouble. This is now extended further. Today in economy, we have seen based on yesterday's economic survey, there was a time when 75 to 80% of agriculture credit was with money lenders and sahukars. That proportion has fallen down to 23%. If we do similar analysis for MSMEs, the numbers will be almost similar. While we have ensured organized financing for MSMEs in agriculture, there is still scope for improvement, and credit guarantee scheme worked properly, worked effectively, I think will do wonders. And this credit guarantee is not coming free. The borrower has to pay guarantee commission to the corporation. It can become self-fulfilling. I hope some of our credit guarantee corporations on agriculture, on MSMEs, on housing becomes like Freddie Mae, Fannie Mae, Ginnie Mae of US, which has ensured American dream, every a house for every American.
So Nilesh, can't let you go before having a cricket analogy take on the budget.
So this budget is, like India's T20 World Cup campaign. We were winning all the matches up to final. We became fastest growing major economy. And then in the final, there was a little bit of pressure, but Surya Kumar Yadav picked up a beautiful catch and made us World Cup winner. This budget is like Surya Kumar Yadav's catch. It achieves trinity of impossible, path of fiscal prudence, support to investment in infrastructure, and generating employment to create boost to consumption. A trinity of impossible between fiscal prudence, investment, and consumption boost is just like Surya Kumar Yadav's sketch. I hope and pray eventually this sketch helps us become Viksit Bharat.
Dharmesh, the cricket fan that you are, would you agree with Nilesh's analogy?
No, I was just saying that Nilesh Bhai's analogy, I only hope and pray we don't have a Rohit and Virat retiring after the World Cup. So let's hope this party continues.
Absolutely. Both of you, thank you so much for joining in and, giving us.
If you like this video, then like, share and subscribe to ET Now.